Hello, this is the Tradesight U.S. Stocks, Futures, and Forex Market Preview for the week beginning Sunday, March 14th, 2021, ending Friday, March 19th. Hope you had a good trading week. We're going to start with the Forex side. Here's a look at the dollar index daily chart. The dollar has come back up a little bit recently, kind of retesting the lows from back in August and September. But overall, if you look at this, going back about 7-8 months here, you can see we've been stuck in about a 4-point range on the dollar, which is not much. So when we look at the Forex pairs, we'll start with the euro dollar. As usual, that's the inverse of the dollar index. But in this particular case, you can see that we landed, the low of last week was the red static trend line from the 9-bar move up back in November, right to the pip on it, by the way. Pound dollar didn't do much this last week. It wasn't the super exciting week on the Forex side. Aussie dollar, this one's also kind of flat. I mean, the Forex in general has been kind of light for months now. Euro yen did break out to new highs. Pound yen did push again to new highs. This is the one that's actually been moving over the last month or two. Pound Swiss, not much there. If we look at the interweek action, 30-minute candles on the euro dollar to start with, you can see high to low for the week here is only about 150 pips. And, the biggest move is probably, they're really all pretty bad days. The biggest move is maybe Tuesday. I don't know. It's hard to even say. It's pretty untradeable when you're in a 60 pip range each day on the euro dollar. The pound dollar high to low is just about 200 pips. So a little better, but not much better. The moves were Tuesday and Thursday, obviously, and then back on Friday. And we did make a little money on Thursday, but there was a day where there was no calls because the level spacing was so bad, and a day where nothing triggered as well. So kind of a boring week from that perspective. We look at the Aussie dollar, 180 pips of range. And it is what it is. All right, so now let's flip over to the stock market side here in the U.S. We got the ES front month futures contract. This is the daily chart of the broad market in futures form. Right at all-time highs again. Good stuff this week with the stimulus passing and some directed funding to the local governments that were about to get crushed and get some money in the hands of people, the 20 million people or so that are out of work still from COVID. So really helps solidify the lower end of the economy that was still suffering badly, obviously, as opposed to the top end of the economy that has not had issues really over the last year as much. Let's go through the major daily charts. Crude oil down 46 to 65.56. Just off the highs, again, as the economy starts to heat up, as people start to travel again, it's going to be a little bit of a timing game to get the oil flow going again. And there is supply and demand issues, obviously, as the demand starts to pick up, getting that supply back out there, because obviously it wasn't needed as much over the last year. A lot less planes flying, people driving, all that type of stuff. So, oil is on the rise because of it, and that's a good sign for the economy, but ultimately, the $60, $70 range for oil is kind of where we always are, right? I mean, if you go back, for example, go pre-COVID, right? Right before COVID started at the beginning of 2020, where was oil? It was right around 60. It was right around where it is right now, right? And we spent most of the prior year before that in the mid-60s. So crude oil at $60 in the middle of that range, that's kind of a normal thing, right? Obviously OPEC's playing some games with their supplies and stuff like that. So that's tightening up the supply, and we've got increased demand. So it's a positive for the economy, but ultimately, you don't want to see oil shoot to $120 a barrel or anything like that. So we need to keep the supply going once the economy is kind of back to almost a full normal capacity. Gold up $3.20, bouncing off the lows, but remember we are near the lows there. S&P cash gained just 4 on Friday. Look, this Thursday to Friday was the quarterly futures contract roll, where we moved from the March to the June contracts. As we know, that always takes the fluff out of the market, or the air out of the market, for a day as the technicals realign to the new contract. So Friday of contract roll is usually dead in the water, and most professionals either don't trade or trade very lightly and very picky. And, so you got the S&P up 4, that kind of fits with that. We'll look at the intraday action here in a minute. NASDAQ 100 was down 115. This is off the highs a bit, obviously, as the interest rates are kind of on the rise. This has started to affect some of the bigger tech stocks that were overvalued over the last year or two, especially in a COVID world. For people who thought the market valuations didn't make sense, those rising interest rates are going to affect those bigger overvalued companies. So that's fine. Bring them back in a bit where they belong. The stock's down 32 points. Again, that 13 sell signal back about 3 weeks ago was right on the money on the stocks. And then What's supposed to be the target from a 13 sell signal? It's that red static trend line, and look where we went to exactly this week at the low on Monday was the red static trend line. So a perfect signal, a perfect reaction to the signal. Biotechs down 33 points. Russell 2000 up 14.24. That's new all-time highs for the Russell 2000, the small caps. Keep in mind, we're 12 candles up now, though, so one more day up will be a 13 sell signal on the daily of the small caps, and we haven't had that since back in July, and that one didn't matter. The VIX dropped back to $1.22, dropped back $1.22 to 20.69, back under that red static trend line. What's been amazing about this static trend line is we really haven't correctly broken it. That's why it's still solid. So we'll see what happens here, but this has been the support area for a while. Is the VIX going to drop back into the teens, which would be positive for the market, or are we finally going to get some pullback in the market, and maybe the VIX is going to be a buying opportunity here soon? So we'll watch for signs of that. The trend closes at 0.59, and we dropped a big number off, so off the 10-day moving average. So the 10-day moving average dropped to 0.93. I don't see it getting down to 0.85 again, based on where the numbers are that are going to drop off. It'd have to get some really low numbers. So I'm not sure there's a sell signal in the near future on the trend. NASDAQ volume weak on Friday as expected. This is what happens with quarterly futures contract roll. It affects the stock market quite a bit. Only 5.4 billion shares. That's the lightest, one of the 3 lightest days of the year so far. Advanced decline ratio on the NASDAQ plus 431, so more stocks were up and down. That's basically the 10-day moving average as well. On the New York plus 417. Google, and this is where those interest rates come in, so even though the S&P is near all-time highs, Google down 50.54, still holding that high-range base for now, but we'll see what happens. Apple down 93 cents, right, and this has been off the highs. Netflix down 5.04, and this is off the highs, but still in the range it's been in since July. Amazon down 24.10, still sitting where it was back on 4th of July. Tesla down $5.87, so this one's taking a hit a bit. Facebook down 5.48. Zoom closes down 8.78. Goldman Sachs up 6.71. New all-time highs on Goldman Sachs. TLT, by the way, the banking stock's doing well on all this stuff, obviously. TLT, the 20-year bond ETF, down $2.95. So that's a gap down new low on the TLT. That's where those rising interest rates are, right? The Dow Jones was up 293, new all-time highs on the Dow. Again, we don't care that much about the Dow. Bitcoin, right now trading at 57,250, almost to 60,000 as a high here over the weekend. So we'll see what we get there. When we go to the intraday charts or the intraday candles, what we see is, let's do 10-minute candles here on the ES. This is the intra-week. So now you can see, the back of last Friday on the far left, then Monday was a flat opening, tried to go higher, curved, and came back down, closed slightly negative for the day, but that was kind of the low close of the week. Tuesday gapped up again, tried to kind of do this curved thing, and kind of came back at the end. So at that, it's not really much of a week at that point. And this is where everything just got horrible. Wednesday, the small gap up. We got the 13 sell signal on the 10-minute. But look at that. We opened the opening candle and the closing candle of the day. The highs and lows are basically the same. So the whole day was dead flat. And that's before you get to the quarterly contract roll, which starts, look at the volume at the bottom of your screen, because this is now the June contract, right? So it starts to, we get the gap up Thursday. Some volume starts to come into this contract on Thursday, as it should. Then you still get another one of these like rounded days, like where the, kind of a curved, inverted cup. Didn't go far from the open. Friday, a small gap down, and then this is where all the volume is now in the new contract. And again, closed basically flat for the session. So a very uneventful week from that perspective, and that is sort of what you'd expect to see for quarterly contract roll. Now, for the week ahead, what are we talking about? Well, before we get to the actual economic data points, I do want to point out 2 things. We just had the time change over the weekend, so everybody needs to remember that. And then number 2, if you look out at what's coming this week, the biggest thing is triple expiration, right? So we just had the quarterly contract. Well, now we're going to have that quarterly triple expiration on Friday, which is usually a dead day on Friday. But somewhere in here, hopefully Wednesday or Thursday, usually we'll get that options unraveling move, and that can actually generate some excitement. So we'll see. In terms of economic data, New Zealand, visitor arrivals, core machinery orders out of Japan, Sunday, Rightmove housing price index out of the UK, China's industrial production, retail sales, fixed asset investment, and unemployment rate tonight. Tertiary industry activity out of Japan on Monday, German WPI out of Europe, housing starts and manufacturing sales out of Canada in the morning, U.S. Empire State Manufacturing Index at 8:30 a.m. Eastern Time. At 10:30, we've got CB Leading Index, tick long-term purchases out of the U.S., Westpac Consumer Sentiment out of New Zealand, Housing Price Index out of Australia, Monetary Policy Meeting Minutes out of Australia, Credit Card Spending out of New Zealand. Going to Tuesday, revised industrial production, French final CPI, zoo economic sentiment, German zoo economic sentiment, Canada's foreign securities purchases. U.S. has our retail sales numbers and our import-export prices. Then capacity utilization and industrial production at 9:15 a.m. Eastern Time. Business inventories and the NHB Housing Market Index at 10. We've got the GDT Price Index out of New Zealand, current account out of New Zealand. Australia's got their MI Leading Index number tomorrow night, or Tuesday night, sorry. And Japan's trade balance. Now we go into Wednesday, Dutch parliamentary election. You don't see that on the board every week. Final CPI out of Europe, German 10-year bond auction out of Europe, CPI data out of Canada at 8:30 a.m. Eastern Time on Wednesday, along with the U.S. housing starts and building permits numbers, and then our weekly crude oil inventory numbers. A two-day Fed meeting this week, so the Wednesday is the announcement at 2 p.m. Eastern Time. The press conference is at 2:30, so that means we'll be half size for Forex Tuesday night going to Wednesday, and probably low expectations. It's interesting with this two-day Fed thing that they now do. So that's going to make it interesting to see how triple expiration fits in. Obviously, we're not expecting any rate changes out of the Fed for quite a while here still, but their language about the future can still be have impact on the market. And if the triple options unraveling gets wrapped up in that move, you could see it late Wednesday. Otherwise, probably Thursday then this week, the way that lays out. New Zealand's GDP that night, the unemployment rate and employment change and RBA bulletin out of Australia that night. Thursday, trade balance out of Switzerland, PPI out of Switzerland, Italian trade balance, European trade balance, rate announcement out of the UK, so two rate announcements this week, ADP non-farm employment change out of Canada in the morning, along with the US Philly Fed Manufacturing Index, the weekly initial and continuing jobless claims numbers. 10 a.m. Eastern Time here, our CB Leading Index, natty gas storage at 10:30, Japan's National Core CPI, consumer confidence out of the UK, retail sales out of Australia, okay, Japan's monetary policy statement, and the Bank of Japan. So we've got a third rate announcement this week. And then going into Friday, we've got the Bank of Japan press conference, German PPI, public sector net borrowing out of the UK, and retail sales out of Canada. And that is that. So it's a packed week. Again, the focus point is going to be the triple expiration, but also the Fed announcement. So be aware of that, and we shall see how the week plays out. I would expect, Monday might be okay, but Tuesday, Wednesday, and Thursday, probably the more interesting trading days of the week, especially, around the Fed, maybe Tuesday and Thursday. For Wednesday's an iffy one because everybody waits for that Fed announcement. And if there's nothing special in the language, it's probably not going to move the market. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.